starting our webinar series today. My name is Tyson Mavar, one of the AT&T focused retirement advisors for the retirement group. And on today's webinar series, we're going to be covering some important information related to the retirement decisions AT&T employees are facing here in 2022 and some of the most common questions that we've been receiving from our clients from AT&T and many of the folks that we've spoken to that are considering potentially leaving the company before the end of this year. For those of you who aren't as familiar with our company, the Retirement Group is an independent financial planning organization, a fiduciary that specializes in working with corporate employees, AT&T being one of the companies that we focus on and have many clients from, in helping people to transition from their company and manage their assets through retirement. We use Charles Schwab as a custodian, and we help people put together retirement plans and keep those retirement plans sustainable by investing them appropriately, but also making sure they walk away with their company with the most money possible and not leave any money on the table by understanding their benefits plans. We have offices throughout the country, and if you are not yet a client yet, or if you have not yet spoken with us, one of the ways that we can help you is through running a retirement cash flow analysis to help you identify some of the reasons that you might consider leaving the company this year, as well as some of the reasons you might want to consider staying with the company. And everybody's going to be affected by some of these changes differently, so it's important to build a plan, look at all the moving parts and variables, and assess this on a case-by-case basis. And for many people, this is going to be the best time to leave the company, depending on a variety of factors that we'll talk about several of today. We also have a variety of complimentary services that we encourage you to take advantage of. The webinar series that we publish on our LinkedIn account. We have an AT&T retirement planning guide that's available on a complimentary basis through our AT&T retirement website. And we also have a variety of different ebooks that we encourage you to peruse through, specific to the AT&T retirement strategies, but also generic to retirement planning strategies such as investment planning, estate planning, Social Security planning, tax planning, some of the biggest mistakes that we see people make related to the tax decisions and the distribution strategy. So take advantage of these, even if you already have a financial advisor or if you're planning on doing everything on your own. We feel that we're well equipped to help people through this transition in an effort to understand all of the moving parts and all of the different considerations when leaving AT&T. So when we talk about the AT&T benefits plans, especially when it relates to the pension, it's impossible to avoid the interest rate discussion. I'm going to zoom in here so we can look at what the interest rates have done this year. You can see in 2021, the November interest rates will predict what the 2022 retirees will receive as a lump sum. And there's actually three different interest rates. You see the first, second, and third segment interest rate. These interest rates are related to corporate bond yields for both short, intermediate, and actually long-term corporate bonds. And these rates change on an annual basis. They change on January 1st every year. And when these interest rates go up, lump sum payouts for the pension plan on most AT&T pensions, not all of them, but most of the pension plans will go down. And you can see how they've fluctuated. They were substantially higher only 3 years ago. They've dropped down quite a bit, in part as a result of the pandemic and some monetary policy stimulus. If we go down here, we can see what the most recently available rates as of September 2022 came out as, and these interest rates are substantially higher than the rates you will receive if you retire by this year. So what that means for everybody is a little bit different, depending on whether you're Legacy T, SBC, and on the non-bargain program, whether you're a non-management employee. Everybody's pension plan has different timing rules as well as different interest rates that are going to impact this lump sum payout. But the important thing to remember is that when an interest rate increases by a 1% change, it's going to result in roughly a 10% drop in your lump sum. This is also a function of your age. And we pay closest attention to the second segment rate because this accounts for the largest part of this equation. It carries the most weight in the calculation of the lump sum. And that interest rate has already gone up more than 2.5% just this year in 2022. As a result, we're seeing some pretty large reductions in pension plans to the tune of anywhere from 20 to over 30% in some cases for the folks that don't leave the company and take their pension by the end of this year. So really important to pay attention to these interest rates, especially if you were close to retirement anyway, or if there's a possibility that even if you're not close to retirement, you may have the possibility to work somewhere else and protect your pension. This has to be looked at, and we'd strongly encourage everybody to run a cash flow analysis to incorporate all of the different moving parts into this decision-making process. Now, we receive questions constantly from not only our clients, but people that are either considering becoming a client or just realize that we have a deep understanding of the AT&T benefits and want to know how some of these things work. So one of the questions we've received very commonly this year in 2022 is it better to retire from AT&T this year or wait until next year with the new interest rates? And now this is not an easy question to answer, but there's going to be a variety of factors that we want to incorporate when building a plan and a comparison on different retirement dates. So some of these factors might be your current age. How close are you to being able to afford retirement to begin with? And if you cannot yet afford retirement, how much do you need to make at another job, and how long do you need to work at that other job? We found in running these projections that many people, as a result of looking to avoid losing money on the lump sum, as well as having the ability to invest that money on the lump sum by leaving this year, some people only need to make about half of what they were making at AT&T and still produce a better retirement plan when all things are considered. So again, a lot of moving parts there. Health insurance is a part of the decision-making process, and your availability of insurance now that insurance is not subsidized for managers that didn't leave the company by the end of last year, by the end of 2021. But many moving parts here, other income sources, your family, expenses, and how those change over retirement. And this is an exercise that we go through with people, even if you're not yet a client, to start to understand, is this possibly the best time for you to leave the company and maximize your net worth, even if you can't find another job that pays you even close to what AT&T is paying you? When we incorporate some of the other variables, it might be something you want to consider. Question 2, how will inflation affect my retirement from AT&T next year? Now, most of you know we are in an incredibly high inflationary environment historically. We are seeing some of the highest inflation numbers, or the highest increases to cost of living in the United States that we've seen in about 4 decades, or close to 40 years. So not only does this mean that things are getting more expensive, goods and services that we buy not only before retirement but through retirement are going to be more expensive, but there's some other implications of inflation. Implications related to interest rates. We've already seen interest rates go up as a result of inflation, at least in part. And this is also going to affect both of many of the pension options, all of the pension options as it turns out, whether you take your pension as a lump sum or as an annuity. We've already seen the interest rate impact on the lump sum. As interest rates are going up, most of the AT&T pensions are going down on the lump sum side at least. But also on the annuity side, many of you know that your AT&T pension plan, if paid as an annuity, is a fixed annuity. It is not adjusted for cost of living increases over the course of the rest of your life. And so if we're looking at potentially a 30-plus year period for your retirement, things are going to be more expensive, and the higher the rate of inflation throughout your retirement, the more painful that fixed annuity is going to become, or the less valuable that's going to become over time at an increasing rate. So inflation affects many things other than just our current cost of living expenses. And if it takes some time for us to get a handle on inflation, for us to be able to curb inflation in the United States and get back to our desired levels, which is the 2 to 3% per year range in consumer price index growth, or cost of living increases specifically, we could see rising interest rates not just this year, but for several years into the future, which is going to mean deterioration of your lump sum at an unpredictable rate in future years. So very difficult to predict this, but inflation is going to have an impact on a variety of different aspects of our retirement decision-making process. Question 3, at what rate are interest rates increasing? How much will this cause my lump sum to drop? So we talked about what rate we know. Interest rates have already increased this year. Remember, the November rates are the interest rates that govern next year's lump sum recipients' payouts. We don't have the November rates yet, and we won't actually have those rates until usually about the 3rd or 4th week of December, which is a very short window of time to be making a decision to retire with the information that we need to know exactly how much our lump sum is dropping by next year. So we track these rates that are published monthly by the IRS, and September, like we saw, is the most recently available data. And it's a function of your age, how much these interest rates are going to impact your lump sum. The younger you are, the more of an impact interest rate increases are going to have on your lump sum. For instance, we've seen some folks that are already mod 75, service pension eligible, in their early 50s, seeing drops in their lump sum of greater than 30%. So to put that in perspective, if you have $1 million lump sum, using the September rates, we might show you only having $700,000 next year, or a $300,000 loss overnight when they change these interest rates on January 1st. So of course that person would have to leave the company and commence their pension by, depending on what pension plan they are, by sometime in 2022. So if you're on the non-bargain program as a manager, you have to retire by December 30th, commence your benefit December 31st at the latest to enjoy the 2022 interest rates for your lump sum. Not the case with Legacy T employees and a variety of other pensions wherein you have to commence your pension on the 1st of the month. You can't commence your pension the next day after you retire, like you can on some pensions. So for many employees, they actually have to leave by November 30th, commence their pension December 1st, to enjoy the 2022 more favorable lump sum interest rates. So it depends on your age as well as how long you've been at the company, but it could be several $100,000 lost on your lump sum. And not only that, but the opportunity cost of continuing to work at the company is the inability to invest that money as soon. And if you have $1 million lump sum and we use a conservative interest rate of, let's say, even just 4% on your money, that's $40,000 per year in interest that you are not gaining if you stay at the company. Now, keep in mind there still will be some pension accruals by staying at the company, but you're still exposed to the risk of interest rates going up and more than wiping out what you're accruing on your pension, especially since the accrual rates have dropped in this last year on most pensions at AT&T, most management pensions. Best advice that we have is run your numbers. This is a complimentary service the retirement group provides, and probably more companies out there that are eager to earn your business or at least develop a relationship with you, at the very least to continue to build their reputation within the AT&T community. At least that's been our goal for the last 30 years that we've been working with AT&T employees. So use us, take some of our time up, spend some of your own time. We are very confident it will be a good investment of your time. Even if you don't leave the company, at least to start building a retirement plan and start running some what-if scenarios. What if you lose your job at the company in 2 years? How would that compare to leaving the company voluntarily this year, even without a severance package? Or what if you are able to stay at AT&T another 10 years? How does that compare to leaving the company now and working a job that pays you less for another 10 years? These are the things that you want to be looking at, and this is the time to be looking at this, folks, as we have some of the most substantial increases to interest rates that we've seen in close to 30 years since the mid-90s, in a 1-year time period at least. So schedule a meeting, even if it's just a brief consultation. We'll get to know you a little bit and guide you in where we think are some of the important issues that you should be paying attention to, and everybody's different on this. And spend some time to put together a cash flow analysis. We're delighted to spend time with you if you're interested in spending some time with us. Unfortunately, statistically, most people don't have a written plan for their retirement. 74% of Americans over the age of 50 statistically don't have this plan. And this is absolutely unacceptable, given the fact that the only cost to you to do this is some of your time. And like I mentioned earlier, we're very confident this will be a good investment of your time. So put some time in now, folks. If you'd like to get a hold of us, you can email us at info@theretirementgroup.com. You can call us at the home office at 800-900-5867. You can even take a picture of this QR code displayed here on the slide to get onto the calendar of one of our AT&T focused retirement advisors. And if you haven't done so yet, I encourage you to follow us on LinkedIn. That's where we publish some of these live webinars that we host. and have a lot of content specific not only to the AT&T retirement strategies, but other retirement strategies that are related to taxes, estate planning, Social Security planning, and investments for retirees. So with that, we're going to wrap it up today. If you have any questions, certainly feel free to reach out to us at our home office. And everybody have a good rest of the week. We hope to talk to you again very soon.